Hey everybody, what's going on? It is James here with Crypto Common Sense. Wanted to shoot a market update video for you. It is October the 11th, just after the daily close. Daily close was almost an hour ago, and want to talk about what's going on with Bitcoin. Also want to address my last video a little bit. So before I can jump into all of that, first off, please do me a huge favor. Go ahead and hit the thumbs up button on this video and subscribe to the channel if you haven't already. I really appreciate that. So first off, I want to talk about the last video just super quickly. Listen, guys. Sometimes I do a video and I come off a little strong, and especially when I'm talking about these people on Twitter that are, constantly bullish. I want to really paint this picture very clearly and just kind of put this to bed. I normally don't focus so much energy on other people and what they're doing. I think it's a waste of time, except in this space, because these people and what they're doing directly affects their followers, right? And I personally believe that it takes a total lack of integrity to do nothing but spout bullish nonsense. And especially if you don't really understand technical analysis, you shouldn't be out there pretending that you know, right? If you've got 50,000 or 100,000 or 200,000 followers like some of these guys, they have a responsibility to their followers to present an unbiased view, or at least as much of an unbiased view as possible. We're all biased, right? But the bottom line is, it's very irresponsible of them to do what they do, and that's why it gets my goat. It's not that it affects my trading. It doesn't affect my trading at all. They don't cost me money. They don't, make me money. I don't care what they say. I trade my own plan. But they do cost a lot of unsuspecting retail investors money who are just doing their very best, trying to get ahead for their family, and some people are going to sit back and say, James, everybody's responsible for their own decisions. I agree with that completely. We all got to take responsibility for our own actions. But guys, when you have those types of followings, you've got to be responsible. And you might look at my video and say, James, you only got 1,500 subscribers. What do you know? Guys, I come from an internet marketing background, right? Before I closed my internet marketing business, I had over 30,000 customers, not followers. Over 30,000 people who had actually bought products from me. Many of those products were $1,000 products, $500 products. My most expensive products were $10,000. These are people that gave me $10,000 to teach them how to make money online, right? So I get the responsibility, and there's an ethical line there that when people cross it in the internet marketing world, I had to kind of keep my mouth shut because it was a small little niche, and if you talked bad about anybody or if you called anybody out, you got labeled as negative and nobody wanted to do business with you. See, in the trading niche, I don't have that problem because I don't give a shit whether people want to do business with me because I make my living trading. I don't need them to like me. I don't need them to be my buddy. I don't need to be in their little clique where all we do is pump Bitcoin, okay? But it's not emotional. It's not that it affects my trading. It certainly doesn't. I just hate to see people get led off a cliff. I hate to see innocent people being led down a path, and that's all there is to it. But I don't have any ill will toward those people. It's not a malicious thing. I don't wish harm upon them. I hope that they're well. I hope they're healthy. I hope their families are healthy. I hope they make all kinds of money the legit and ethical way. I just don't like the nonsense where they refuse to look at a chart and say, okay, I might be wrong here. Some of those guys were literally guaranteeing, right, that Bitcoin would never go under 10 grand. That's the actual words they use. I guarantee it will never happen. And then what happens? People who don't know any better, they get overconfident. They start leveraging credit cards to take out loans. They put money in they can't afford to lose. And here we are, 15, 20% later. And where are those people at, right? They're stuck like Chuck. So anyway, let's talk about Bitcoin. That's enough about that. Guys, Bitcoin is doing exactly what I wanted it to do. And I'm not going to sit here and say I expected it to do this because it was definitely throwing up some red flags. This could have went either way. It could have really went up to 9,000 or 9,500. And in fact, I'm going to show you something because it still can, okay? So this isn't the time for for bears to get overexcited. We still need to play this, somewhat cautiously. So the first thing I'm going to look at is I'm going to look at a daily chart. Because if you remember in the video, I believe it was yesterday or the day before, I said that, if we came down to retest this neckline, we would need to find support if this was going to move up. And then if it fell below it, that would be a good sign for bears. Well, it did fall below it, and in a very convincing manner. It just crushed right through this neckline. And if we zoom in on the 5-minute chart, you're going to be able to see this a little better. This red line was the neckline over here. I'm going to turn volume off because it's kind of making everything cluttered. This thick red line was that neckline. We came down and bounced off of it. So I had actually opened up additional shorts up here around 87.30, right in this area, okay? And then when it dropped, I actually did close some of the shorts on the way down. I didn't like this bounce. This bounce looked bullish to me, but I did leave a fairly significant portion open. So I had, a nice size short still open. I continued to ride it. I wanted to see this break under that. We did. We came up and retested it. We failed. Came up and retested it. We failed. So that was all looking pretty good. So then I left my desk and I went and watched El Camino with my daughter. A little disappointing, but overall pretty good movie, I guess. And then, around noon, this thing had just been channeling sideways, so I went to bed. And I basically set an alarm because this had been the point of support. This like 82, 85 level had been support. So I set an alarm. If it broke through that, put my phone on my head, set the alarm, and went to bed. And of course, I got woke up right here when we finally broke underneath that support. So a lot of people are looking at this going, okay, it's time to go full bear. But look, we came right back above it. Now we're below it. So it's like, okay, well, now what? Well, here's what I've been watching, guys. I posted this a couple of days ago, and I had it drawn to this, off of this green wick here. It went up a little higher than that, so I had to redraw it. And, my entry point on this particular setup is going to be 82.1750. So what that means is I'll consider adding to my short position if we get to 82.17. You can see that it came down. The low on this candle was actually 82.22, so it didn't get there. But I'm still watching that level because if we break under that level, my new target's going to be 64.09. And if you're wondering, James, where are you pulling these numbers from? I don't understand. Well, all this is to me is one giant bear flag, right? Bam, here's our first leg. Here's our bear flag. Bam, here's our second leg. And all you do is take this move, the measurement from here, and you basically copy it over to here. So, for example, sometimes those aren't fibs, by the way. Somebody asked me the other day, are those fibs? They're not fibs. It's just it's part of a setup I use. But if we look at a price range, right? This is essentially how it works. See that? It's just a price range. That's all it is. And then you copy it off of the top, and bam, there's the target, 64.09. Okay, so if that plays out, it'll be great. I'll make enough money to live on for a couple of months off of that one trade. So we'll see. But right now we've got to keep watching. It's not time for the bears to get over exuberant because we're still inside of this uptrending channel here, and this could actually be wick off accumulation, guys. So let me show you what I'm talking about. My charts, they look so dirty with all these damn lines on them. But okay, so this blue line was the top of our descending triangle that got busted. We came down, basically retested it. So again, that could be a bullish, not bearish, but it could be a bullish sign. Retesting the top of that, we could spring right off of it and head up. Okay, so you've got to keep that in mind. Really, really a tricky area here. If you are going to be entering short positions, fairly soon, make sure. Of course, always make sure that you're using stop losses, but especially on something like this. But this could all be, this whole area down here, I mentioned this last week, that this could end up shaping up to be mini accumulation, and that we could be getting a bounce up to this $9,500 level. If you're watching the videos, you're probably like, oh my God, dude, stop talking about 9,500. Guys, it's not out yet. I'm a bear. You guys know I'm a bear. You know I'm short. But, we've got to be open to these possibilities because if you take a look at the wick-off method, let me show you something. It is entirely possible that we went through all this phase here and that pump to 8,800 was actually our signs of strength, and that this pullback down was nothing more than the first leg of consolidation, right? If you look at this, basically you'll pull back to right around the AR level or just above the AR level. So if we go back and look at our chart, I don't know which chart I was on. Okay, if we go back and look at this, see this green line here? That was support that we bounced off of. It lines up over here fairly closely with our AR level, right? I believe this was AR. I haven't drawn the labels on there. So yeah, AR is the first bounce after the bottom. So, right, so here's the bottom, here's the bounce, right? Up in this area, that's where it closed at. It bounced right off of it. So again, I'm watching that closely. I want to see it break underneath that level. And that level is sitting right around 82.34. So 82.17 would be underneath that level. And by the way, when I say 82.17 on this, I'm talking about a close on an hourly candle. All right, I'm not talking about like a tail, okay? I want to see this close underneath this level on an hourly candle at least. before I consider adding to my short positions. And there's some other things that are going to have to line up. It's not just that one thing. Remember in those other videos I was talking about having multiple reasons to take a trade? I'm already in a sizable short. It's multiple Bitcoin short. So, I'm not going to get overzealous and suddenly start doubling down and putting 10 or 20 Bitcoin shorts on there. It's not going to happen. But if I can add a couple of Bitcoin to the short position and do it safely, that's what I'll be looking to do. All right. But we've just got to keep this in mind. It could be that this is where we're at right here. Okay. And the bottom of this, consolidation, and that we're going to move sideways a bit before we move up more. And if we do move up more, again, I think we'll go up to $9,000, $9,500, right? Which one? I don't know, right? I have no idea. I would expect 9,500, and the reason I would expect 9,500 is because we have this gap, right? Talked about this in one of the previous videos. We have this gap that's just kind of hanging out. I actually missed this wick in the earlier video, but there's a gap sitting right there. So it could be that we go up and fill that gap, okay? The other thing is if we do break south, right? By the way, if you look, we had a gap right here and the gap just filled. I don't know if you guys saw that or not. We had this gap right in this area. Look at that, it filled it. So again, that takes away some of the bearishness. Bouncing off that blue line takes away some of the bearishness. And now we're back basically inside of this range, right? Between this 82, 85 area all the way up to this neckline way up here around 83, 81. That blue line was just an alarm, nothing more. Okay, so now we're back in this range, and we got to see how this thing plays out. Lots and lots of stuff says to me that this thing is going further south, but I could be wrong. One of the reasons that I felt comfortable going to bed today and not really worrying too much about this trade was the fact that the volume, right? We had huge spikes of selling volume, but the buying volume was just nothing to really, it was just red. Even when there was a lot of buying volume, it turned around and, the sellers slammed it right back down. Same thing over here, right? We had this big drop, had a lot of selling volume, and yes, it did pump up, but the buying volume was nowhere near the selling volume, right? Buyers just aren't that excited about buying Bitcoin right now. That to me is a bearish signal, okay? So again, I'm short, I'm biased because I'm short, and we'll see how that plays out. On the bigger time frames, $6,400 is going to be my target if we do break south, and that's just a short-term target. From there, I think we will have some type of bounce, and then I think we're going to go lower, guys. I'm going to be lazy and use one of my charts that I posted over on Twitter instead of finding all these saved charts. But let me find. Oh, this was good. You guys might not have seen this. So yeah, I posted this up. I thought we were in distribution, and this is when it first started to fall. It was 86.67, and then like a minute later, it just did this, which was crazy. So wick off isn't always spot on. Sometimes it can look like wick off, and it's not. In that case, it worked out in my favor, but it still wasn't really wick off. Goodness gracious, I'm trying to find this, guys. Here it is. So this is that bubble chart that I posted back on September 25th. And again, if you look at the denial, this was just kind of like drawn off of this support over here. Basically, I thought, if it was a weak bounce, it might just retest the bottom of this wick. That wick was right around a little over $9,000. So that's really where denial was up around that $9,000 area is what I was thinking. If this does indeed go down, it's going to play out just like this. That would be pretty awesome. And then if we go down, this is drawn down to 6,000, but based off of that breakout target, I think 6,400 is probably more likely. And then I think we would get some type of dead cat bounce, probably back up, maybe even as high as 7,000, 7,200, something like that. And then, continue to move down. I'm still looking, guys, for that gap to fill down around 3,500 to 4,200 bucks, right? There's this big liquidity gap right here that starts around 4,200, and there's another one down here that starts around 3,500. What I'd like to see happen is, for it to come down here, do some consolidating, and then maybe throw a tail down there to fill this gap, and then, a move up, which could be, we could see it end up being a spring, right? A wick off spring, which looks something like this, right? You'll go down, you consolidate sideways, and then boom, you'll have basically a false breakdown, which will be a tail, and then you'll get a violent move up off of it. So, I feel pretty good about Bitcoin. I feel pretty good that, I have a good handle on the direction it's going, but we'll see. One thing I want to point out is this chart right here. Now, I posted this on Twitter a couple days ago before it played out, but people were saying that we're in accumulation, that we're getting ready to start a new rally. The reason that I disagree with that is this looked more like this part of this fractal. And if you look after it dumped underneath this trend line, this blue line is a 4-year trend line. And after it dumped underneath that trend line, it had a 12% dead cat bounce off of the open, not off the tail, but off the open. And then further downside that took it underneath that 4-year trend line. And if we look right now, we've had this bounce. We don't know whether it's a dead cat bounce yet. I think it is. Time will only tell. We'll have to wait and see. But if you look at this, it bounced 12.2%, which is eerily close to the type of bounce or the type of reaction we got back here in late 2018. And I truly do believe that it's probably going to break down and fall underneath this trend line. And if it does, you're going to see, panic. You're going to see panic set in, and that's what will push it down to 6,000, 6,400 if that plays out. That's what I think. One other thing I did want to address in this video is this death cross thing. So I briefly mentioned it in one of the past videos. I'm just going to talk about it real quickly. Guys, this death cross, I do think it's important. Okay, I want to be very, very transparent. I saw a video the other day people were sharing where there's a guy with a huge following account. I like some of his videos. I don't like some of his other videos, but I think he's probably pretty intelligent and pretty spot on with most of his stuff. So he actually showed some literature where some people don't believe death crosses matter when the blue line or the 200 moving average is moving up and the orange line is moving down. Now, he gave several examples where death crosses happened and then they were basically false signals. But the one thing I would point out about this death cross is if you look in 2018, we had a death cross where the 200 was indeed moving up and the 50 was moving down, and it certainly was not a false break. Once we broke south of that death cross, we stayed underneath that 200 moving average until the breakout in April this year. So I am watching it. I do think it matters. I just don't think it's anything to get too upset about right now, because if you look, we have a gap, not a gap like a liquidity gap, but the gap between these two moving averages. The slower moving average is up around 94.42. The faster one's down around slower one's at 86.76. Faster one's at 94.42. That is, an almost $800 gap. So it's going to take a little while to close a gap that large. If you look back here, if we can find a gap where there's about $800 apart, right about here, that was March 11th, and they didn't actually cross until the end of March, about 3 or 4 weeks later. So, we've got at least a couple of weeks, I would say, unless this thing just gets totally crazy and just drops super, super hard. We've got a couple of weeks, I would say, before we're going to know if this is going to cross. And then we'll have a couple more weeks where we don't know whether it's actually a true cross or whether it's a fake out and it's going to go right back above it. So I'm not really putting too much concern into that right now. What I am watching is the 200 moving average on the daily, because you can see that we get rejected off of it over and over. And this last rejection, we had the false break above it and then a fierce, just a slam, a visceral reaction to that, which basically says that, bears could be in control. But again, we don't know that for a fact, because this could be, right? Well, no, I don't think it would be that. But this could be accumulation, right, before a pump up here and then further downside. So, we'll just, wait and see how it plays out. But overall, I haven't been trading any alts at all, guys. I just don't have any Bitcoin to trade them with. So Bitcoin pairs, I'm not going to buy Bitcoin, try to take a Bitcoin pair trade, try to sell it for Bitcoin and then try to sell the Bitcoin for fiat. It's just too much headache and there's too much risk involved. And quite frankly, there's just too many fees involved with that. So I'm happy to just trade Bitcoin for now. And, I'm not trading US dollar pairs on the alts either, because, you get into an alt position and Bitcoin moves 1% and suddenly the alt moves 3 or 4%. So the volatility, it's great if you're on the winning side of it, but it can be a bit of a nightmare if you're on the losing side. So for me personally, I'm just going to sit here and play Bitcoin until this market decides what it's going to do. And then, when it does finally bottom out and it does finally start heading north, I'll be able to do a lot more videos for you guys on altcoins, right? I prefer, the funny thing is, I'm so bearish in these videos, but guys, truth be told, I prefer to trade alts, right? I actually like trading in a bull market, obviously, a lot more than I like trading in a bear market, because all I do is stick my money in Bitcoin, right? The money that I'm trading with, it goes into Bitcoin. I don't have to worry about Bitcoin. It's, passively making gains, and then I can just trade alts for Bitcoin, right? Much, much less stress involved. There's no true FOMO involved because you've already got your Bitcoin. It's already sitting there, and you're not worried about, Bitcoin going up while you sleep or anything. So, it's just a much, much less stressful existence when you can trade alts. But right now, there's no reason to trade alts. I know that some people are trading them, and that's great. I wish them luck with that. But, if you're making a 10% gain on an alt where you make, 10% Bitcoin, but then Bitcoin drops, is it really a win? How big of a win is it? Is it really, it messes up your risk reward. It screws everything up. So these are the levels I'm watching though. Again, 82.17, I feel like that's an important level. We need to break below that for my setup to come into play. And I would like to see an hourly close below that before I get too excited about it. And if so, then I'll start watching for a break toward the 64.09. Keep in mind, guys, the way this works is if I enter a position here or if I add a position here, when price gets to this level, my stop loss moves to this level, right? My first one will be up here. So if I enter here, my stop loss is here. If I move to this level, my stop loss moves to here. If price moves here, my stop loss moves to here. And then finally, if price moves here, I take profits on the trade, okay? But at no point is it like guessing, like, oh, okay, I think I'll do this or I think I'll do that. No, once I'm into the trade, this is the trade plan and that's how it works until the trade is played out. Either I get stopped out for a loss, I get stopped out for even, or I get stopped out at one of these, levels for a profit. All right, video's getting long, so let's go ahead and wrap it up. Remember, guys, I am literally some guy sitting in a spare bedroom. I am not a financial advisor. Nothing in this video is financial advice or trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you guys enjoyed this video, please be sure and give it a thumbs up and subscribe to the channel. And don't forget, you can check the description for links where you can follow me on TradingView, Twitter, and also where you can join my absolutely free Facebook group. Also, don't forget, there's a link in that description where you can join my paid group as well. The paid group is not a shill calls group where I'm shilling out calls. It's just a group where I teach people how to actually trade. It's a skill that will literally pay you for life if you get good at it. You can trade the stock market, you can trade cryptocurrency, you can trade precious metals, you can trade derivatives, all that kind of stuff. All right? Again, this is James with Crypto Common Sense. Trade safe.